Hi, Josh Robertson here from Xact Accounting. Thanks for downloading our property development feasibility and cash flow tool. Just wanted to spend a couple of minutes walking through how to use the tool just to help navigate using the spreadsheet and getting ready for doing your first project. So the key thing is all of the input fields in the tool are the ones highlighted in blue. So you just want to enter in the fields as they need to be. So we're looking in terms of lead-in times in months, so putting periods, so what's the project timeline, what's the end date around that project. We also want to look at, we'll start with the cost bit as well. So you want to be putting things in around the land purchase, any of the other costs as well as part of the project, not just the construction. So we're talking around sort of council contributions, also consultants' professional fees as well. You want to put down here in terms of the budgeted cost for the project, and that all comes in and sums to the bottom here. Enter all of these numbers in here to including GST. The land purchase may or may not include GST, but make sure you're putting it in, including GST. You also want to put in here just an initial indication of what you believe the actual project will sell for, including the GST as well, or the gross realisation value in the project. Then what you can do here, and this is for the purpose of the cash flow, is looking at each element when that element kicks in at which month and how many months it spans. And that helps build out the cash flow, which I'll show you in a second how that looks. Down the bottom here, it gives you a bit of a helpful indicator of equity contributions to the project. And so what it does here as well, and we just modify this quickly, it'll indicate if you need to contribute more. Given most financiers sort of weigh up to sort of 65-70% of the project, so it'll give you an indication of the equity contribution. So if you put in 200 here, it'll suggest you might need to put in a little bit more than that to actually make that work for the LVR. There's inputs down here as well in terms of the finance costs, broker fees, interest rates, etc., which capitalise into the project. And ultimately, what it does down here is builds a development profit after finance costs, excluding GST, for the project, and return on the actual cost and development margin that you want down here. And ultimately, you want that number starting with a 2. Over on the cash flow page, it seeks to sort of outline across all those inputs. So you look at it, refers to the feasibility timelines at the front page to sort of cash flow out. Now, I appreciate the construction costs here don't work perfectly in a linear way when you're building a project, but this is just for demonstration purposes. Of course, we can assist with the tool if you want to get that cash flow a little bit more in line, but ultimately it's just trying to give you an indication of how the cash flow could fall across the project, just so you can indicate how you're going to track from a cash flow perspective and where you might need to put further equity in, and it models it out from there. Of course, with any of our tools and resources, if you have any further questions, would like some assistance on how to navigate it, please reach out to the team at Xact Accounting. We